please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Lupin reported Q3 earnings yesterday and the margins were the key disappointment, coming in at 17%, primarily due to the pricing pressure. Also, the revenue fell around 13%. The big bull of Indian market, Rakesh Jhunjhunwala, quizzed the management in the conference call yesterday. Here is an excerpt of that conversation.
You say that on one side, Sandoz and Teva is closing down some products, withdrawing some products and increasing prices of certain products.
Yeah.
So, what does it mean? Are you saying that the process of the bottoming out of pricing has started, but the actual prices are still declining?
Well, we think that it's really starting to bottom out when you start seeing large players like Teva and Sandoz getting out of a large portfolio of products. It really sends a signal that they are at the pain point, from our perspective. Also, the number of product discontinuations that we have seen in the last 6 months has been more than what I've seen in the last couple of years. Again, to me, that's a signal that companies have, got to their pain point. When I sit down with a number of our peers, both here as well as in the U.S., what I'm hearing from companies, other CEOs, is that all of them have been challenged over the last couple of years, and believe that for us to be able to maintain a healthy generic market, we have to be able to get a reasonable return on the products that we supply. So all of those suggest to me that we are starting to see a bottoming out. We have seen a few products where we have been able to pick up volume at a margin higher than what we have seen in the past. But I wish I could say that for 30–40% of our portfolio. But I would hope that within this year we start to see the bottom. I think we are close to it.
Right. So therefore, as of now, you're still seeing erosion, but the erosion in number of products is coming down.
All right, that's not all. In fact, CNBC TV18's our very own Ekta Batra, she also asked the management on the plans for their Goa plant during the earnings call. Listen in.
In terms of the warning letter, when can we probably expect to re-invite the US FDA for a re-inspection? I know you want to close this in this calendar year, but what would your target be for a re-inspection?
So I think June is when we expect to complete all activities that we had to undertake under the warning letter. Then we'll go back to the FDA. So then after that is when we'll give a comprehensive update and ask for a meeting with the FDA.
Okay, time for a quick break, but up next, Hero MotoCorp meets estimates, reports an in-line set of quarter. We'll take you through the expectations from the rest of the pharma world and talk about Hero MotoCorp numbers after this short break.
We're getting early rates coming in from both Hang Seng as well as Shanghai. The Hang Seng index should come up for you sitting with a gain of 824 points. We're getting the Shanghai markets too up about 1%. The SGX Nifty indicated a start of 100 points at the open, and now that has increased to about 130 points. So we'll keep an eye out on that, but we do have a lot of earnings to contend with. Shifting focus to the auto space now, Hero MotoCorp reported a mixed set in line with what the expectations were. Sonia's here with the key highlights. Morning, Sonia.
Hi, Mangalam. Thanks a lot for that. Well, the earnings were absolutely in line with street expectations, no surprises. But I expect the stock to be in the green because the management commentary was very positive. This time around, their top-line growth was pretty impressive. It came in at 15%. That's on account of a good 16% growth in their volumes. More importantly, the realizations for the company have gone up. Despite higher raw material costs overall impacting their margins, the realizations for them have risen about 3.5% on a year-on-year basis. Now, remember, the scooter business and the premium motorcycle business has been a bit sluggish, but this quarter has not been too bad. So scooters have gone up about 23%. The management said that they have improved their market share in the scooter business and are focusing very hard on improving these two pocket scooters and premium motorcycles. They also said that they continue to expect double-digit growth for the industry. They have gained market share in motorcycles and in the scooter business. In fact, the scooter business market share has improved to 14% at the end of this quarter versus about 12% that we saw at the start of the fiscal. Also, the spare parts business is doing very well. Revenues from there have gone up more than 35%, and that aided their earnings this time around.
Okay, Sonia, so that was about Hero MotoCorp. But what are the expectations from Eicher Motors today? Is it expected to zoom ahead?
Well, you know, for Eicher Motors, they have two wings, right? There's the Royal Enfield business and the commercial vehicle business. Royal Enfield has been decent. In fact, it's been lagging a bit in the last couple of months. That's why you've seen the stock underperform. But the commercial vehicle business has done exceptionally well for the sector this time. And I expect that will really lead Eicher Motors' overall performance. We are expecting a revenue growth on a consolidated basis to come in at 20%, EBITDA growth of 22%. Operating profit margins will be flat at about 31.7%, largely stable, you'd have to say, and overall profit growth of 23%. Now, for the Royal Enfield business particularly, the volume growth has slowed down. The company has done, 25-30% volume growth for the past many quarters. This time it's slowed down to about 18.5%, and that's the reason why the stock also has fallen about 12-15% in the last 3 months itself. But commercial vehicle business has done very well, so the volumes have gone up by almost 40%, and that is what will give that overall revenue and EBITDA growth of 20% plus.
All right, Sonia, thanks a lot for that. That's as far as Eicher Motors is concerned. Remember, the stock was up about 4% from the low point in yesterday's session, ahead of numbers today as well. But let's move on to our daily dose of medicines. Cipla and Auropharma will be reporting its third quarter numbers today. Ekta, what is the street expecting?
Well, I'll start with the Aurobindo numbers this quarter. So, for example, the Aurobindo quarter is expected to be quite stable. So, revenue is expected to grow around 11% on a year-on-year basis, with margins coming in at around 23%, which would be flat on a year-on-year basis, and a profit growth of around 18%. Now, the most important thing is basically what's going to happen with the US business. Remember that the US is around 47% of sales for Aurobindo, and this quarter it is really expected to probably be aided by Renvela generic, the kidney drug that they had launched with limited competition in the month of June and July of 2017. But incrementally, Renvela generic has seen competition, and hence Q-on-Q, the US business is likely to be impacted because of pricing pressure within Renvela. But on a year-on-year basis, you are going to see the higher sales impact them positively. So that's on Aurobindo, and commentary obviously with regards to the US business would be top of mind. Now for Cipla, the interesting part of the numbers is the consistent kind of margin improvement that we've seen for Cipla, and they have guided to the market that there will be a consistency or sustainability in terms of the margins that they've seen. So that would probably be the first thing to watch out for. And if you're talking about the margins, we're expecting around 19.3% versus 18.6%, with a range anywhere between 18 to 21%. So that's important. Anything probably sub 18% would be a big disappointment, or a disappointment for Cipla this time round. So that would be important. And again, this would be probably driven by one, cost cutting, and as well as the US business, where they had a launch of a particular drug, Palmicort generic, and that is going to aid the numbers and the overall margins.
Okay, Ekta, thank you so much for that. It's a busy day lined up for you with Cipla and Aurobindo Pharma, but time now for a quick break. Up next, we'll get you a check on the cues to watch in the futures and options space. Stay tuned. Well, let's get chatting about commodities now, and Manisha Gupta joins us with all the update that's happening in the commodity space. Manisha, good morning. We're seeing equity is recovering some of the losses it made over the last couple of sessions. Is that the case in commodities as well?
Well, quite mixed, if you ask me, for the commodity as a space. We have seen the crude oil prices stabilize a bit, but that's because the US dollar gains have kind of paused. You also are looking at the US weekly inventory numbers coming in today, where the expectation is that you might see another draw in the US inventories, and that has been supportive as well. And as you pointed out, yes, some support in equity markets definitely will support the underlying raw materials. So there is some bit of a buying that we have seen come from metal space. Yesterday wasn't such a great day. You saw nickel prices decline by 2%. Zinc, lead, copper, everything was down between 1 to 1.5%. But in Shanghai right now, we are looking at a bit of a buying coming in here. The markets also would continue to watch out for the US data that would be released in the evening for further direction.
All right, Manisha, thanks a lot for that. Let's shift focus to the F&O space, then the futures and options space. Yesterday, very, very interesting action, because the FIIs, they sold in the cash markets. They bought something in the stock futures, perhaps converted some of their positions there. They sold in index futures and bought a lot of puts. So that picture should come up for you right now. 23 crore worth selling in the cash market, 1600 crore worth selling in index futures, but 2800 crore worth purchase in index options. Most of that deployed towards buying puts, and stock futures, maybe they converted some of their cash positions into stock futures. And what is happening, Anisha, to give you a picture of cricketing parlance, what they've done is they started the series thinking that it's a flat pitch, let's go out and hit sixes. Now they've realized that it's not a flat pitch, so they've called for some protection. So last three sessions they've been buying some puts. Call selling has reduced, but they believe that maybe upside could face some bit of a hurdle. So take that point forward, the start of the series and now point forward. They started the series with 80% long exposure, 60% long exposure in index puts, and 76% exposure in index calls. Now that has come down to 58% longs in index futures, increased their long puts and decreased their long calls. So they are seeing some protection. Yesterday, we saw the 10,500 calls seeing a bit of writing, so maybe we can see some bit of short covering there. 10,300 and 10,000 puts added some positions on the short side. Maybe those guys will go home with a fair amount of premium in their pockets. In terms of stocks, watch out for Gen Irrigation. That one's entered the F&O ban again after coming out of it yesterday. And out of F&O ban are India Cement and Wockhardt. So we'll keep an eye out on those two stocks.
Okay, Mangalam, thank you so much for that. A bit of put buying is seen from the FIIs now. But with that, it is a wrap on Power Breakfast. We leave you with the picks of our bullseye contestants for the week.
My first call today is a buy call in Century Plyboards with stop loss below 283 for target of 314. My second pick is a buy call in Navbharat Ventures with stop loss below 138 for target of 158. My third call is a sell call in Voltas with stop loss above 611 for target of 550. And my last call is a sell call in IDBI Bank with stop loss above 61 for target around 52.
My first stock call for the day will be a buy on NCC, which I'd buy with a stop loss at 108.5 and with a target of 115. My second pick will be a buy on Max Financial, which can be bought with a stop loss at 518 and a target of 545. My third stock call will be a sell on Lupin with a stop loss at 808 and a target of 770. And my final stock call will be a buy on L&T Financial Finance Holding with a stop loss at 156 and a target of 168.
The first buy recommendation is on Arvind. One can buy Arvind Limited for a target of 403 with a stop loss of 369. The second buy recommendation is on SRF. One can buy SRF for a target of 1822 with a stop loss of 1692. The third buy recommendation is on Dish TV. One can buy Dish TV for a target of 78.50 with a stop loss of 70.50. And the final buy recommendation is on Wockhardt Pharma. One can buy Wockhardt Pharma for a target of 793 with a stop loss of 713.